God it's Friday.
I'm not saying it today. I am not, on
It's
my
straight from my heart.
on our
Thank God it's
anniversary
Friday.
on our anniversary day when Manish Chokhani is in the studio, I would say, thank God it's not Friday. Thank you, it's Friday, because that's how Manish has come. We should say thank you to him first for joining us on anniversary celebration.
Thank you.
Thanks for having me. And I wore green for you.
Thank you
Yes.
very
Because
much.
I wasn't sure we'll have green or red on the screen.
Yeah, well, we are flat, so it's okay. Actually, we are up 40 odd points. So
See,
not
I told you
bad
I can
at
do
all.
it.
Yeah.
So
So,
now
how
the
have you
next-
been in the last 3 years?
Great.
Yeah.
Well, relaxing
Invested
in life.
a lot.
Invested in a lot of things, not only the market, because as you grow, and I've said this to you all earlier as well, we have these 4 stages of life, right? You go through student life, 20, 25 years, then you go through the householder or working life, and then there's what you call vanprasth, when you're mentoring and giving back, and also learning new skills. So I've been enjoying myself.
Buffett has made 96% of his wealth after he turned 60. I know you're not 60. So the best of Manish Chokhani is yet to come.
So look, I have a slight nuance on that life is not only about making the money, because then you get to 90 and then you say I want to give away 98% to Bill and Melinda Gates Foundation.
But it's very
But
easy
I have other
to
interests.
say that when you have already reached that
But
amount of
see,
wealth.
you have to define what's enough for you. So
Yeah.
when we all started, you may have said, if I make 5 rupees, I'll be delighted. If you made 50 and 500 and then you still want to make 50,000, there's no end to it.
Yeah.
So it's like one of those Gordon Gekko dialogues, every man has a number. Are you chasing a number in your
No,
life?
not at all.
Not at
Never,
all.
actually never did. You know me now for maybe 20 plus years.
Yes, 20 years.
Although the channel's only 13, but we go back a
Yeah.
long way.
Okay. You like movies?
Oh, of course.
Did you watch a lot
Lots,
while you were staying
lots.
at home?
I
Did you
know
like
where,
RRR?
I know where this is leading.
No, you don't.
Did my wife call you about
No.
RRR?
No, you have no idea.
Every time,
Maybe
you
her
know,
and I are
we
just
get into
into
every time we get into an engaging conversation.
Okay, 1 second. Before that, can we just have the RRR movie poster? Full frame?
I thought you had me as Tom Cruise.
No.
What the
You'll
hell
be
happened?
surprised.
Oh shit, that's not me for
Your
sure.
wife's not.
It is you.
After seeing this
RRR,
video,
recession, rupee, rates.
no, after seeing this poster, your wife's not going to complain.
Guys,
I'm in
let's
severe
just
pressure.
have that poster back on air.
Please don't.
Yes.
That's terrible.
And now let's get in reactions.
Oh my
Where
God.
do we start? Which hour?
Whatever you like.
Let's talk about recession.
As if
That's the
I
big
know
fear.
anything. 30 years has taught we don't know anything. Nobody knows anything. We hazard guesses.
No, but I mean, all 3 hours. Do you need a minute to get
No,
over
no,
it?
See, in media, we focus on one more hour.
I'm
that
scarred
are
for
rumors.
life looking at that
See,
image of
in
myself.
media, we look at one more hour, which is rumors, so I'm not getting there.
Sure.
We will focus with you on the other hour, which is not
Right.
there, which is reality.
Sure.
So is recession going to be in reality?
In the West, I think it's overdue for many, many years because they've kept kicking the ball, the can down the road for many years. And the playbook of 2008 was used again in 2020. And this time, not just the Fed, but even the politicians got into the act. Basically doing what you call, you put money in everyone's pocket as if it's grown out of thin air. So that will have consequences. And the way they were trying to play it is you reflate the world from a 80 trillion global GDP to 100. And because no other currency was willing to pick up the slack and get the dollar down, I guess it's come through the resource and the commodity complex. And the trigger was, of course, the Russia and the Ukraine war, because even till then they were pumping more money. So as recently as 3 months ago, the Fed and all the politicians were still in that mood of keep playing with fire. And I remember being on your anniversary show last year and talking about this, that if the fireman is the arsonist, how do I know how to play? Because if, interest rates are the force of gravity in our market and they are manipulated, currencies are manipulated, we are only pricing off those cues in the equity markets.
So what's the way out? Because with hiking rates, Fed is also hurting its own balance sheet.
Yeah. So, Fed balance sheet is a figment of,
Well,
you can do whatever you want.
Yeah.
So,
Okay.
but reality is, look, the average US citizen, and they are among the better countries, so we don't even discuss Europe and Japan and all, is less well off in real terms than they were in 1980. And 60% of Americans are living on a weekly paycheck to paycheck. And the politicians have tried to say, I don't want to give any bad news to anyone. So it's been like pampered children for too long. And the consequences are coming. And what I think all these great gurus we read about from the US have been warning, there's a big day of reckoning coming. Is this the one which is happening now? Because this blow off in oil prices, while we are at 125, if this continues, who says it doesn't go to 175? And 2 years ago, we were at negative oil prices. So the sort of world we are living in, no one really knows. The Fed clearly has lost control. The politicians never really had control. They're just
So how will
following
they
trends.
beat inflation? Because
So
that's the need of
my
the hour.
my take is they will play a schizophrenia game. So they will keep kind of crying wolf to the market that we're going to hike more aggressively. When the pain gets so much that the voters now complain that we are suffering not inflation but lack of jobs and lack of income, at that point you go back and give back the same old lollipop of giving free money. So you may get zigzag movements in rates. And currency, I've been saying this for long, that the adjustment in the world has to happen through currency and bond markets. Equity markets are the third derivative
Dimension.
play. We just price it quicker, but the blow up is really from those markets.
So what are financial markets pricing in? For next 6 months, are financial assets headed lower?
Financial assets are headed lower, I think, from a global perspective, and of course we'll talk about India later, but the backdrop of the global equity markets is terrible. And I don't think people should have, how do you say, you go from denial to anxiety to depression to giving up. So it's not at give up stage, because a lot of the bulls overseas are still of the view which I just gave you, that maybe they'll hike for 6 months, 9 months, and then panic will hit, and then again they'll loosen, and we'll get another leg up. And there's rotation always, right? Because you may move away from tech, and energy stocks, for example, have done well. So there's always some place where money is being made in the markets. I think that's the innate, the feeling of helplessness and giving up is not yet there.
So I just want to go back to the second dimension before we talk about the third. Is our currency policy flawed? How do we strengthen the rupee? Because a lot depends on that, right?
Yeah,
that was the second hour, if you want to see that poster
So, I mean,
again.
look, you will have a whole show with me on this, and I've been quite vocal and public about this for many, many years, that you don't become the third largest economy in the world by behaving like you're in 1991. And if we keep playing to the strengths of the rules which were set by the Western world, which is in decline, secular way, because of their demographics and debt and all of that, we are the losers. And you see today, if we sit on $600 billion as a country, that's 20% of India's GDP. And if rates are going up, you basically have a mark-to-market hit on your bond portfolio. If it were any other bank which was listed, it would have been hammered down absolutely. And there's no point saying that I'm a country where money will flee and I won't be able to meet my import cover. Because you are the consuming country of the world everyone's dying to sell to. No one's going to abandon you. FIIs have sold 25 billion and we behave as if they've abandoned the country. They have 600 billion invested here. So they have as much to lose if something happens to India as anyone else. So there's confidence which comes when you become a larger player, which China showed for the last, almost 2008 onwards. They realized the game has changed and they played the game. They kept the currency strong. We were at what, 6 against the yuan, and yuan's basically been pegged to the dollar.
Yeah.
And we are at what, 11 or 12 now? So we've pretty much halved, and still our exports haven't gone up. And you've brought that inflation into the country, you've got the purchasing power down, you've not allowed industry to get economies of scale. So it's a regime shift which has to happen in the world, and someday we will do it. Because we are also in a way followers. We don't like to take a lead and say we could now be the kind of engine for the world.
It took a lot of time when the quantitative easing started that the value of money is going to get cheaper, interest rates will remain low, and then there could be a mania kind of an set up in some of the startups and some of the tech companies. But now the regime is changing. So investing in this decade, because the regime is changing, which is interest rates are going to move higher, liquidity will get tighter. How will life change for a stock market investor?
So Nikunj, inflation in asset prices is called a bull market.
Yes.
Inflation in the real world is called inflation because we don't like it, right?
That's Mehngai.
Yeah. So if we spend the last decade inflating asset prices,
bull market success is called as prosperity.
Exactly. Yeah. So we will pay the consequences of that now. So it alternates. I mean, across history, you take hundreds of years. It alternates between financial assets and hard assets.
Okay.
So this should be a decade globally of hard assets. Now, whether it's real estate, whether it's resources, we will see. Like the older guys always used to talk about, we'll go back to gold because that will be a store of money because everyone's debasing their currencies. Like I think, if I'm not mistaken, 50-60% of all dollars in existence have been printed in the last 18 months.
But the follow-up to that, Mr. Chokhani, is that hard assets have already gone higher.
Sure.
Whether I look at US housing prices in India farm prices in India,
Sure.
prices of metal,
Sure.
palladium, everything is at a record high. So has that inflation already happened?
The thing with record highs is they are the record highs until the next record
Yes,
is made, right? So when you were looking at the FANG stocks, I think for last 5 years they made new highs every year. If we had talked of oil prices, for example, last year, we would have said 100 is like the top. 120 is a top. There are enough people out there, Goldman, and even if Warren Buffett's gone and bought Occidental Petroleum, he's not gone and bought it for a 6-month view. He's taken a view that this is going up permanently. He's bought utilities, he's bought railroads for a man who taught us how to invest in brands and be asset light. He's made that trade, and we think we'll know better than him.
He bought Apple also.
I would. So he bought Apple in this mania period as well, right?
Yeah.
And it's 40% or more of his portfolio.
And he was so
now.
late on it.
Yeah.
Yeah.
And Apple also, remember, from the time he bought it for 4-5 years, it was a buyback story. It was a capital allocation, and he bought it at 10% earning yield.
Yeah.
If you can buy a growth stock at a 10% earning yield, like hats off. That's why he is who he is.
Yeah, yeah. Okay, so I want to just, focus on this chart. If we can just go back to that history of mania charts. 1960s started with Walt Disney, 75, you had gold, Japanese banks leading the way, 1985, 2000 is when, the NASDAQ 100 picked up, 2007, the commodity mania, and 2010 to 2020, we've seen FANG stocks. It's a different story in the last 6 months. What's happened to them, that's for everyone to know. The point being, Manish, that, irrespective of wars, crude, inflation, the markets always tend to climb the wall of worry. How is it that they're going to digest the new reality that we're staring at right now? Because we will pass out of this soon.
Yeah, I mean, look, humankind goes on. Even when we had COVID, I remember, I don't know if it was in your studio or somewhere, I said, this is not a life extinction event. It will be a setback, and we price things on terminal value. So terminal values, after a dip, you will come back. Coming to this chart, which of course Mark Faber and others had, introduced us all to. The basic point is we abandoned the gold standard and we went to this Bretton Woods where dollar became the reserve currency of the world. And because they got this power, they kept printing. And effectively, a dollar is probably worth 1 cent of what it used to be then. And that led to bubbles in every decade. So you had, like you said, the famous Nifty 50 in the US in the 70s. Then it went to the commodity gold, silver boom, culminated in emerging market boom, which Japan and Taiwan then were. And they all were up 10 to 12 times in that decade. Then went to the NASDAQ bull market, then the commodities and emerging markets bull market, then the FANGs bull market. And by that token, you rotate from, like I said, from the financials and tech to hard assets and commodities. And in a way, emerging markets are commodities.
But we are commodity
resources.
Consumers, so then we should ideally lose.
No, but honestly, when the money comes in Tata Steel and the money comes in Reliance is when you see color of money in India. And we enjoy a 10%, 12%, a 15% kind of nominal growth if we get 6-7% inflation. India hates a 4% inflation. I know it's against the economic wisdom, but that allows you to show growth in salaries to people and so on and so forth.
Everything. Excited.
So, I mean, while US wants a cap of 2% on the inflation, India probably wants a floor of 4% on the inflation. So we look like a double-digit 15% type, growth country.
Okay. So, just looking at all these realities, do we now digest the fact that the bear market is here? And the other thing is also how prolonged could it be? Because we've not had a bear market in the past decade.
Yeah. So that's the challenge, which honestly I'm guessing as well, because the policymakers have found a new toy, which is I can print. They found a new toy now on the political side where we can send paychecks to people's homes.
Yeah.
So unlike the past where bear markets were there to force the excesses of the previous era out, and therefore it took 3 or 4 years to wash things out, bring everyone back to sort of sanity level, and you restart the game. And it was the spirit of capitalism where you weed out the inefficient players. But at a 0% or even a 3%, 3.5% US rate, you're not forcing people to go out of business. So unless those fellows shut down, you will not start seeing efficiency and capitalism the way we define a return. Because US is running as a socialist country. I mean, it's the beacon of capitalism to the world, but the way they are running the world is now what suits me, I will do. And even, oddly, it's policy misstep in a way which has triggered the Ukraine war.
Yes.
And without seeing the consequences that this will result in food and energy inflation, just putting a sanction is very easy, because in the 80s you could do it, you controlled the world. In the 90s you could do it, and now you've made countries think, do I really want to hold reserves in a country which can block my assets overnight? So all this is leading up to a regime change where you say dollar may not be anymore the kind of sovereign reserve currency of the world. It's not a unipolar world where US is going to rule forever. And each one is looking after themselves. So it's a breakdown of that golden era from 1990 to 2015 was the peak of capitalism in a way.
Yeah.
And the era where the older guys, and even I wasn't around then, is the kind of fall of USSR and the Berlin Wall. Going before that, it was each man and woman for himself, and there were blocks, and now you probably have Russia, China versus the West. And where India plays in that will define how we go.
So point being that the bear market could be much shorter than what it was previously.
The point being, ordinarily, if they want to behave like Paul Volcker in the 80s, you want to crush this inflation once and for all, which is painful for the voter and for the politician there to digest. So if they do the right thing, then you have Ronald Reagan, Paul Volcker kind of era where you force a crushing bear market, but it lays foundations for 10 fantastic years. But if you want to behave, how shall I use the word, namby-pamby, in 6 months later you lose your nerve and you say, reverse this because I've lost the midterm elections and I can't afford a re-election bid also blowing up. So 23 middle, you would expect rates to again start turning.
Yeah. Or maybe they'll
on
start
the way
peaking.
down.
They'll stop rising.
And they'll start signaling that, we are scared now.
Okay, let's divide the market for our audience here. From eyes of an investor, I must qualify for our viewers that Manish Chokhani is one of the most fantastic investors I've interacted with over the years. Now, his ability to identify trends and cycle and opportunity is quite extraordinary. Let's divide the market into where there is opportunity, where there is value, and where there are still excesses.
So, look, I've said this in the past, you lose money top down because of these cycles, but you make it bottom up.
Yes.
And in typical cycles like this, things will get abandoned and thrown by the wayside. Okay. So again, just to frame it, if you say go back to 2001 when the tech blow up happened, and
Tech and 9/11.
And in a way, this is the same. Like tech and 9/11 is a political event after a blow up, and this is a
Politics, same actually. It's so true.
I mean,
so
in a way, history will rhyme. But at that time, if you recall, the things which were hated and ignored were same hard assets, PSUs. You take 22 in India, you take your best performing stocks of this year. You'll be shocked at maybe NTPC and ONGC and Power Grid and stuff like that. Stuff like that. So there were stocks which no one owns. So small amount of buying lifts it. Whereas whatever I do right now, if I'm holding Amazon or Google or HDFC Bank or Infosys, it's owned by everyone. So where will you sell? You will only sell what everyone owns. So they take more time to bottom out. Like Infosys didn't make money for 10 years. It's a great company.
HUL didn't make money.
Prior period, Hindustan Lever didn't make money for
Even
10 years for
Reliance
investors.
didn't.
Reliance from 2008 to pretty much 2018 was flat. It didn't make anything for anyone. So a company being great and a stock being great are distinct things in the market. So where people are not betting are the interesting places, and there's always that, right? So even when the US was blowing up, where does Mr. Buffett go and deploy capital quickly? He's telling you resources are back. So it may be, I will crush inflation, but the fact is with all this ESG mania, you made sure no capacity is coming.
Yes.
And demand, even in India, is not even, like we're back to 2020 level. And with a young country, our demand is not going away. So will these resources be available? How has China played the game? Why has it gone and spread across Africa and trying to control all commodities? Because they know they're going to consume more. The US and the Western Europe may be in some decline, but the population-wise, Asia is the center of gravity of the world now. So consumption is going to come. I would still bet resources will come back mainstream in the years ahead
Tata
of us.
Steel has gone from the COVID crash 300 to 1500.
Right.
Hindalco almost was up 3.5x.
Yeah.
My question is that while what you're saying perhaps is absolutely right, but in terms of a discussion on television, aren't we slightly late in discussing that?
No. So look, let's take the case of like Hindalco has not been a stock I like. So first let me start on something I don't like and then see something I don't like starts looking interesting. So maybe at 600 it was over exuberant to say that this boom will last forever. But you take Hindalco case today, and I may be slightly off on my numbers, but I think it's currently what, a 9 billion type market cap. I think they probably have 4 or 5 billion of debt. Aggregate, I'm taking the whole of Hindalco.
Including Nobilis.
So you're getting a 13, 14 billion dollar kind of EV. They will, whatever you say, they will make 3 billion to 3.5 billion of EBITDA going ahead. The debt, like I said, within a year and a half, two, in theory, you could pay off the debt. So the 9 billion equity value becomes a 15 billion equity value by just sheer paying off of debt.
Enterprise
so it's a
value
60% upside mathematically in 2 years in the stock from today. And if they do not pay off the debt and they're putting money in equity expansion in other projects which they've announced, and some they will do, some they will defer, and so on. If you're putting $1 of money into a capex, and you think it's going to create $2, only then you'll do it. Otherwise, you won't do it. So, question is, do you make 60% here or do you make 100% here in the next, say, 2-3 years from here? So, maybe 600 was too ahead of time, but maybe 300 or 320 is too. It's giving you margin of safety now. Let's just put it that way.
How about
What else
buying?
is looking
No, I'm saying the real estate, Aish. I mean, how about if hard assets are coming back? Real estate stocks have not done anything in the last 10 years. Major consolidation, RERA, big builders own pretty much the large projects.
They could be very interesting, and real estate actually has done well over the last year. So, as the FANG was declining in India, they were the most hated asset class, and it's come back, and they've all done reasonably well for themselves. But see, real estate also, there are two. One is the value of land, and one is the value of what you're converting. So if you're more a converter, which everyone moved away because they got hammered in the last cycle so badly, that they say we don't want land banks anymore, let's just become a converter and efficiently sell the land and keep making our money. There may be someone who's sitting there with the land bank, which is not yet got fully priced in, and maybe money gets made over there. But again, I'm not the expert on real estate still, but there's so many around. I mean, I'll give you like some banks on 2, 3, 4 P multiples of 1 year forward. Even asset management companies, which you remember glory days of when they all listed, and you see their valuations now. And if we all do believe, maybe you have a 1 year bear market, 2 year bear market, 6 months, I don't know. But take 3 years, 5 years out, what is the size of the AUM of the 5 leaders in the asset management business? What sort of ROEs and cash flows do they have over there?
And they don't need capital to grow.
They don't need capital to grow. Or we spoke, and I won't say it on TV, but now with the way IPL has inflated media costs, there are companies which may not have bought media. They own a team. That's half the market cap. And the balance is sitting with, you could buy the company for $1 billion and they make like $300 million of profit a year. And they're sitting on cash. So there's stuff to do. You may lose it top down, but you will make it bottom up.
So now it's time for you to work really hard and find stocks.
Yeah, so I was chilling for some time last year because I didn't know this new world. And I used to keep bantering with you all, right? I feel like Sunil Gavaskar in the era of Sanju Samson. That everyone's coming and hitting and making unicorns in 3 months. Life doesn't work like that.
You also thought you were Lal Singh Chadda and not Maverick.
That was my answer to your, I think, put something up saying
the
it's
tease on Twitter,
Tom Cruise is coming, and everyone be horrified looking at who's come. So I said it's Tom Hanks, if at all.
Let's
but you beat them all. You're RRR. I don't know what the hero's name is.
I don't know who did that to me.
Movie.
Not my idea.
I should have walked out on that. It was terrible.
That was my brain.
Terrible.
But
So
anyway.
just to wrap it up with one final question from my side. A simple question. Inflation, when it comes, it reduces your pricing power. I'm asking it for the benefit of our viewers. The best way to protect your pricing power is to buy equities and buy something which gives you pricing power.
Yeah, I think from a viewer perspective, honestly, most people discovered SIP investing over the last 2 years. I think this is a moment of truth because now you look and say, I lost money in the last 12 months.
Yeah. No returns in last 1 year.
When you don't make returns is the time when you will make returns. When you're making returns is not the time to be investing because you get excited that I'm making 15% every month now in this market. That's when you want to get out and read philosophy and history and watch YouTube and don't look at TV channels. And now is the time to actually go and read balance sheets because there are companies in India, I would say for India now, forget what's happening to the West. Our balance sheets have never been more solid. Businesses have consolidated. They're not in better shape than I've ever seen in my life. They're looking superb. Banks are in superb shape. So if the financial sector is fine, the biggest balance sheets in India, all these commodity guys, Reliance and Jindal and Hindalco and Tata and so on,
they're making money.
fantastic shape. The capex cycle is going to happen because they see what lies ahead of them, and you don't have to worry if the world blows up and with 2% interest rate change, destiny of this nation doesn't change. All your reforms of PLI, GST, your tax collections, all are pointing in the right direction. So if you get your values and you buy cheap in this market, this is not by any means a growth market with easy money. There is enough money to be made, and actually this is the time to look. And if in my younger days I would have gone and been looking more aggressively at small caps, mid caps, I don't do that anymore because I lead a more happy life. But even on horizon, I given you 2 or 3 names today which, mathematically you will make money here, irrespective of what happens to the market.
So a message for the bears out there?
No, it's your time. Let the bears enjoy, but the more they enjoy, the more opportunities they'll create for people like us who are
Why don't you recite
innately
that
bullish
Ghalib
and
quote
optimistic.
which you were talking about? If we can just have that last slide out, it'll come. But you know what the quote is.
The Ghalib one, the Gulzar or Ghalib, which one are you using? I don't know.
The Ghalib one. There.
Guzar
Guzar
jayegi.
jayegi.
खुशी ही ना ठहरी तो गम की क्या औकात है. How long will this be around? So this too shall pass, and I've been around too long now to be called Maverick.
So 14th anniversary.
Maverick made a comeback after how many years? When was the first Top Gun?
Yeah, it's a 80s movie.
86.
Yeah,
so
I was in college then.
Of course you can make the
I wish I
comeback.
looked like Tom Cruise.
86. So 14th anniversary, it will be a green shirt and a green jacket.
Yeah, green,
I mean,
all green.
All green. It'll be a green
Always.
shirt and a green jacket.
Green
next
at
time,
heart.
hopefully. It's really appreciate your time. So
Lovely.
glad you could join us.
Thanks for having me.
Thank
Good to
you.
be out in person after
Yeah.
so long.
Likewise. Like feels like television studio.
Yeah.
Feels real.
Yeah.
Feels that life is back to normal.
Yeah.
Yeah,
Hopefully,
absolutely.
market will be back to normal also.
That'll be fun.
Someday, sometime,
Great.
soon enough.